Most people think a financial collapse looks like stock markets crashing, banks closing their doors, or panic in the streets. We have been conditioned by Hollywood to expect a singular, explosive moment. But that is not how currencies die. The death of a global superpower's currency is not an event, it is a process. And right now, you are living through the final stages of that process. While you go about your daily life, while the mainstream media argues about politics and distractions, the tectonic plates of the global financial system have already shifted. The data I am about to share with you is not speculation. It is not a conspiracy theory. It is simple, cold, hard mathematics. We are witnessing the greatest wealth transfer in human history. This smart money, the central banks, the billionaires, the sovereign funds, they are all making the exact same move. They are quietly exiting the US dollar. They are buying something else. Something tangible. Something that cannot be printed into oblivion. There is a specific price target that keeps appearing in the models of top analysts. $4,400 per ounce. That is where gold is heading. But understand this, gold hitting $4,400 isn't just about you making a profit on a metal. It is a warning. It is the canary in the coal mine signaling that the purchasing power of the dollar in your pocket is about to be cut in half. Today we are going to expose the mechanism behind this collapse. We will look at the death of the petrodollar, the secret Project Sandman being executed by the BRICS nations, and the mathematical inevitability that leads to $4,400 gold. If you have been waiting for a sign to protect your wealth, this is it. This is your final warning. To understand why the dollar is dying, we have to go back to 1974. The United States was in a fragile state. We had just gone off the gold standard a few years prior. The dollar was backed by nothing but faith. To save the currency from total collapse, the US made a deal with Saudi Arabia. It was a simple agreement that changed the world. The US promised military protection and weapons to the Saudi kingdom. In exchange, the Saudis agreed to price all their oil sales exclusively in US dollars. This was the birth of the petrodollar. Think about what that means. Every country on earth needs oil. To buy oil, they needed dollars. This created a permanent, artificial demand for the US dollar. Countries like China, Japan, and Germany had to hold massive reserves of dollars just to keep their economies running. It allowed the United States to print limitless amounts of money, export our inflation to the rest of the world, and run massive deficits without consequence. It was the greatest economic privilege any nation has ever held. But nothing lasts forever. That privilege has just expired. We are seeing headlines that would have been unthinkable 10 years ago. Saudi Arabia is now open to trading oil in other currencies. They are joining the BRICS alliance. They are talking to China about pricing oil in yuan. The monopoly is broken. When countries no longer need dollars to buy oil, what happens to all those trillions of dollars sitting in foreign central banks? They come home. This is the nightmare scenario. As demand for the dollar evaporates globally, those dollars flood back into the domestic US economy. The result is not just inflation, it is hyperinflation. It is a complete loss of confidence. The foundation that held up the US economy for 50 years has been removed, and we are just waiting for the building to fall. While the West focuses on short-term economic data, the East is playing a long-term game. There is a coordinated effort underway to dismantle US financial dominance. In financial circles, it is sometimes whispered about as Project Sandman, an initiative where over 100 nations agree to simultaneously dump their dollar holdings. Whether you believe in the specific name or not, the actions are undeniable. Look at the BRICS alliance: Brazil, Russia, India, China, South Africa. And now they are expanding. Iran, Egypt, Ethiopia, the UAE. These nations control a massive portion of the world's population, its resources, and its GDP. For decades, the US weaponized the dollar. If we didn't like what a country was doing, we sanctioned them. We cut them off from SWIFT. We froze their assets. We did it to Russia in 2022. And that was the wake-up call for the rest of the world. Every nation watching realized one thing: if the US can do this to a nuclear power like Russia, they can do it to us. Trust was shattered. Now, these nations are aggressively building an alternative payment system. They are settling trade in local currencies. Russia and China are trading energy in rubles and yuan. India is buying oil in rupees. The demand for the dollar is being systematically erased. And what are they replacing the dollar with? They aren't just swapping one fiat currency for another. They know that paper money is ultimately worthless. They are going back to the only real money that has existed for 5,000 years. They are buying gold. Pay attention to what they do, not what they say. Western economists will tell you gold is a barbarous relic. They will tell you it yields nothing. They will tell you to stay in the stock market. Meanwhile, global central banks are buying gold at the fastest pace since 1967. Why 1967? That was the last time the global financial order was collapsing, right before the US abandoned the gold standard. History is rhyming. China has been adding to its gold reserves for 18 consecutive months publicly, and likely much more secretly. Poland is aggressively buying. Singapore is buying. India is buying. What? Why are these sophisticated institutions hoarding a useless metal? Because they know the math. They see the US national debt skyrocketing past $34 trillion. They see the interest payments on that debt exceeding the entire US defense budget. They know there is no way out of this debt trap mathematically. The US government has only two choices: default on the debt, which would destroy the global economy, or print the money to pay it off, which destroys the currency. Politicians will always choose to print. It is the path of least resistance. They will print trillions. They will dilute your savings to pay for their mistakes. Central banks know this. They are front-running the inevitable devaluation of the dollar. They are exiting the burning building while the exits are still open. When you see the price of gold rising, do not be confused. It is not that gold is becoming more expensive. An ounce of gold is the same today as it was in Roman times. It buys roughly the same amount of bread, the same quality of clothing. Gold is constant. What you are seeing is the value of the dollar collapsing against it. The ruler you are using to measure wealth is shrinking. Let's talk about the number, $4,400. Where does this come from? It is not a random guess. It is based on historical ratios and the expansion of the money supply. If we look at the ratio of the Dow Jones Industrial Average to gold, or the amount of paper currency in circulation relative to the gold reserves, the price of gold is severely suppressed. In the 1970s bull market, gold went from $35 to $850. In the 2000s bull market, it went from $250 to $1,900. If we apply similar percentage moves to the current cycle, taking into account the trillions of dollars printed since 2020, $4,400 is actually a conservative target. Some models, assuming a full backing of the US monetary base with gold, project prices of $10,000 or even $15,000 per ounce. But let's stick to $4,400. That is essentially a doubling from recent levels. If gold doubles, it means the market is pricing in a massive failure of confidence in fiat currency. Think about the psychology of the market. Right now, less than 1% of global financial assets are allocated to gold. Just 1%. If that number moves to 2%, just a tiny shift in global allocation, the price of gold would explode. There isn't enough physical metal available to satisfy that demand. The paper gold market, futures and ETFs, has suppressed the price for years. But when the physical demand from the East overwhelms the paper manipulation of the West, the price discovery will be violent. We are seeing the supply squeeze happen right now. The premiums on physical coins are high. The delivery times are lengthening. The physical market is screaming that the price is too low. Now, we cannot have a conversation about the death of the dollar in the 21st century without talking about Bitcoin. For many of you watching, you might be thinking, why gold? Why not Bitcoin? The answer is, you need to understand the role of each. Gold is the ultimate insurance for sovereigns. Nations trust gold because it has no counterparty risk and a 5,000-year track record. It is physical, it is outside the digital grid, and it cannot be hacked. That is why central banks buy it. Bitcoin is the people's exit strategy. It is digital gold. It shares the same properties of scarcity. There will only ever be 21 million Bitcoin. It cannot be debased by a central banker printing more. It is portable, divisible, and verifiable. We are seeing a divergence. The older generation and the nation-states are moving to gold. The younger generation and the tech-forward investors are moving to Bitcoin. But they are betting on the exact same thesis. The dollar is failing. The fiat experiment is ending. Both assets are flashing the same warning signal. Bitcoin hitting all-time highs and gold hitting all-time highs simultaneously is not a coincidence. It is the market screaming that the denominator, the dollar, is broken. The smartest investors today aren't arguing about gold or Bitcoin. They are holding both. They are using gold to preserve wealth against systemic collapse and Bitcoin to capture the asymmetric upside of a new digital financial system. The enemy is not each other. The enemy is the devaluing currency sitting in your bank account. So what does this mean for you? If you are sitting entirely in cash or in long-term government bonds, you are the victim in this story. You are the one paying for the debt. Inflation is a tax that no one voted for but everyone pays. When gold hits $4,400, it will be too late to prepare. The headlines will be everywhere. Your neighbors will be asking how to buy gold coins. The panic buying phase is the top. You want to be positioned before the panic. You need to assess your exposure. Do you own real assets? Real estate, precious metals, commodities, quality businesses with pricing power, or scarce digital assets? These are things that can reprice higher as the dollar falls. This isn't about fear. It is about reality. The world is changing. The unipolar moment of the US dollar is over. We are entering a multipolar world with multiple reserve currencies, and in that chaos, gold remains the only neutral reserve asset. The window of opportunity to convert your depreciating paper money into appreciating real assets is closing. The central banks are already through the door. The billionaires are already through the door. Are you going to wait until the door is slammed shut? History is littered with the corpses of fiat currencies. The Roman denarius, the French assignat, the Weimar mark, the Zimbabwean dollar. Every single fiat currency in history has eventually returned to its intrinsic value, zero. The US dollar has had a great run, but the math has finally caught up. The $4,400 gold prediction is not just a number on a chart. It is a report card on the failure of modern monetary policy. You have the information now. You see the geopolitical moves. You see the central bank buying. You understand the debt trap. The final warning has been issued. The only question left is, what are you going to do about it? If you found value in this analysis, make sure you are subscribed. We will continue to track this collapse in real time. Leave a comment below with the word gold if you are holding the metal, or Bitcoin if you prefer the digital path. Let us know which side you are on. Thanks for watching, and as always, stay skeptical, stay prepared, and follow the money.